But Mr. Sahni, if I could, get back to the conversation that we were having, just wanted you to also walk us through, the update on the other projects that you've signed, and that's Mahim and Sai both. What is the latest on those in terms of the construction activity? What stage are they at?
So in all together, including if you look at the Thana land, we have that potential is roughly between 25,000 to 30,000 crores of the value in terms of sales value. The other projects that we have signed now, including the Bandra one, that's about 7,000 crores worth of development value. So as far as Sion and Mahim project is concerned, they are currently at approval stage. So once the approvals are obtained fully, then the construction will begin. The Bandra one, which we have already launched, for which the registration is in place, there the excavation work is going on and it's going on at full swing. In fact, we are ahead of schedule in terms of construction over there. As usual, as you know, the first project that we delivered in the market was 2 years ahead of RERA timelines that we had given. So in that sense, we are in some way rewriting the rules of the real estate industry, because we are not from the industry, we are outsiders. So we are probably uneducated and not bound by some of the rules and conventions which are happening in the industry, and that enables us to deliver earlier than usual.
Okay, and what about the plans that the company is looking at with respect to the Greenfield projects versus redevelopments? Can you give us a sense as to how much of a split or individually how much each of these segments will contribute, and what the pipeline is as well when it comes to your Greenfield projects?
So as far as, in fact, even redevelopments, you can treat them as Greenfield projects, because it's not as though some part has been done. So we're not entering into projects which are half done or which are distressed assets. Essentially, redevelopment means that somebody was already living there and the building is either 30, 40, 50 years old, and the FSI norms have changed. So they want to go in for redevelopment where, the old buildings are brought down and then the new ones come up. So in that sense, those are also Greenfield. So it's akin to pulling down an existing factory and building a new one. But yeah, if you were to look at the split, what we are doing on our own land will be in the range of 25,000 to 30,000 crore development value. And what we have signed on redevelopments as of now is about 7,000 crores of additional development value work. And we continue to look for more projects. Anything which fits our investment criteria, we would be taking on.
Okay, and give us an outlook as well as to what the plans are when it comes to land acquisition outside of Thane. What's on the anvil?
So currently we are focusing on MMR itself because we believe that's the deepest market as far as the country is concerned. In value terms, it's about 28% of India's market. So there is no reason for us to head out immediately and look for other places. And in MMR also, we are looking at places where the markets are deep, values are reasonable. So we are not looking at bottom of the pyramid, because we believe that we do not have strength over there to succeed. So, but we have a strong right to win as far as premium is concerned in terms of development, because the brand is strong. We understand that development, the team is equipped to handle it. So those are the areas we are looking at. And as time goes, maybe we would also look at Pune as a second market to access, but which may not happen immediately, but that would be the next step.
Mr. Sahni, is the strategy for development outside Thane going to be largely redevelopments, or do you have other projects like the Address by GS underway? And would the primary mode of development be via JDs?
So as far as the strategy in terms of expansion is concerned, our preference is to go for joint developments. And redevelopments are also a subset of joint developments, because in classic joint development, a landowner brings the land. In this case, the society is the landowner, they bring in the land, and the redevelopment happens. And since we are looking at strong locations today in MMR, strong locations principally are already developed. So that's why redevelopment becomes one of the spearheads in terms of growth strategy. But we are open to land also. We are open to any kind of raw material which comes our way, because land for us is raw material. It's not an investment asset. So whichever way it comes, yes, joint development is the preferred option because it's capital light, and that's our stated strategy.
What about your overall debt? Will you be looking at any fundraising activities?
So as of now, we are net debt free. Our existing developments are churning out enough cash to meet all our expansion requirements. And going forward, also at least other than construction funding that we may require, we don't see any need for funds at least for the next 18 to 20 months. And after that, if there is any requirement based on any further new projects that we sign, we will take a call at that time whether any fundraising happens or it's needed, not needed. But we have enough room to grow on the debt side itself before we look at other avenues of raising equity or any other form.
All right, good to have you on board. Thanks for walking us through your long-term game plan as well as what the outlook is from Raymond Realty. Well,
Thank you.
let's